What are title loans? A title loan is a form of secured debt that allows you to borrow money short-term in exchange for your car's title. Your car will be used as collateral, so you may be able to get approved even with a low credit score. Most lenders do not do a credit check, so they charge high interest rates. If approved, you may get access to funds in as little as 1 business day. If you fail to repay the loan, your car may be repossessed. Typically, title loan lenders will finance cars that are paid off. Some may be willing to lend loans on cars with existing car loan balances. This is known as a registration loan. How do auto title loans work? The loan amount, interest rate, and terms will vary by car title lender and state. Auto title loans can be anywhere from $100 to $10,000. You'll typically be required to repay the loan within 15 to 30 days. In some states, longer terms may be allowed. You can borrow a loan against the title of your car, motorcycle, RV, or boat. Most lenders will offer up to 50% of the value of the vehicle. Other than the interest rate, you may also have to pay other fees, which may make your total loan cost higher. When applying for the loan, you'll need to fill out a loan application and submit documents such as your photo ID, proof of insurance, and car title. Some lenders may require a set of keys in certain states where it is allowed. How do online title loans work? Online title loans work the same way regular title loans work, but the entire loan process can be completed online. Typically, here's the application process you'll need to follow for most online title loan lenders. Complete your online loan application. Upload documents such as your insurance, address, proof of income, and photo ID. The lender will review your application and will appraise your car. Some lenders will need an in-person appraisal. If your application is approved, you'll receive a loan offer. You can sign the contract electronically and hand over your car title. The lender will then transfer the loan funds to your bank account. The car title will stay with your lender until you clear off your debt. You can keep your car if you continue to make payments regularly. Requirements for obtaining an auto title loan. If you are over 18 years of age, you may be able to apply for a title loan, even with fair or bad credit. You'll need to meet a few requirements to be able to get a title loan as listed here. Clear title. One of the most important things you'll need to get approved for a car title loan is a clear vehicle title. This means that the vehicle should be in your name and must not have any outstanding car loan. The vehicle should also not have been declared a total loss. Some lenders do offer loans on salvage titles, but there may be additional eligibility requirements. Driver's license. You'll also need to provide a photo ID and driver's license. Your ID will be needed to confirm your address and to prove that you are the owner of the car. Income proof and tax returns. Most lenders will require you to submit proof of income to demonstrate that you'll be able to repay the loan. You can submit pay stubs or tax returns. How do title pawn loans work? A title pawn loan works the same way as a title loan, where you can borrow funds by using your car title as collateral. Title loans are known by many different names, such as title pawn loans, pink slip loans, auto equity loans, and auto collateral loans. Title loans are short-term secured loans that use your vehicle's title as collateral. If you own a car and need cash quickly, a title loan can be a quick solution. But they're expensive and may lead to debt problems down the road. Here's a deeper look at how car title loans work and things you should consider before you apply for a loan. Title loans are a quick and easy way to get fast cash, even when you have bad credit. How do title loans work? All loans come with a few risks, but title loans can lead to even more problems if you fail to repay the loan. Your car may be repossessed. Before you consider applying for a title loan, it is important to understand the costs associated, the risks of using your car as collateral, and some safer alternatives to consider. Title loans, like payday loans, are often the only convenient and quick short-term loan option available to borrowers with poor credit. But even when conventional loan options are not available, there are other alternatives to consider, such as personal loans for bad credit, credit cards, and loans from family and friends. If you already have over $10,000 in unsecured debts from payday loans, title loans, or other sources, it is important to take action quickly to pay off your debts and get your finances under control.